What up, Doe? We're back. Man, just happy to be back. 4th of July. You know, it was a pretty dope weekend this past weekend, 4th of July, water park, all that good stuff. So just happy to be back, bring you some good information, and then we got some treats for you today, actually. So, ladies and gentlemen, welcome to the Mortgage Mayhem, the only show where real estate meets real receipts. I'm your humble host, G Money, and today's episode is packed tighter than a TSA bin before they just changed the game. Yep, you heard me right. We're talking no more shoe removal at airport security, but that's just a warm up. Atlanta just approved the biggest budget in the city's history, $3 billion. And if you're a small business owner not thinking about government contracts, you're already losing. Plus, corporate buyouts are swooping in on fire damaged homes in LA. The Supreme Court just set a terrifying new precedent, and Ford CEO is waving the white flag to China's EV game. And that's just the headlines. But today's real heat, we're bringing in Jimmy Rios, CEO of Rios Business Advisors. He's going to give you the straight talk on building real business credit, securing funding, and bouncing back stronger than ever. But before we get started, let's do a little house cleaning.
Welcome to the Mortgage Mayhem Podcast, where the mortgage game meets real life, real talk, and a whole lot of chaos. We break down the deals, the drama, and the data behind the scenes of real estate finance, with a twist of street smarts, savvy, and a touch of madness. Before we dive in, here's the deal. The Mortgage Mayhem Podcast is for informational and entertainment purposes only. We are not attorneys, CPAs, or licensed financial advisors, and nothing you hear on this show should be taken as legal, financial, or investment advice.
All right, we got that behind us. Got to do that. Got to put that disclaimer out there, before every show. I forgot to mention we do also got the 4 mortgage and real estate hacks that we'll get to after the interview with Mr. Rios. So let's just get into it, right? All right, guys. Breaking news. So TSA in shoe removal requirements for all travelers regardless of your pre-check status. So TSU in shoe removal requirement for all travelers regardless of your pre-boarding status. TSU in shoe removal requirement for all travelers nationwide. And a groundbreaking shift in airport security protocols. Sorry about that, guys. The Transportation Security Administration, TSA, has officially ended the long-standing requirement for passengers to remove their shoes at security checkpoints, a rule that has been in place since 2001. Starting today, this change is being rolled out at airports across the United States, according to aviation industry blog View from the Wing. The TSA's decision comes after a thorough reevaluation of current threats and the integration of advanced screening technology at airport checkpoints. These technological upgrades have significantly improved the agency's ability to detect security risks without requiring travelers to remove their footwear. According to 1 Mile at a Time, the agency cited both the evolution of security screening equipment and the reassessment of threat levels as key factors in reversing the shoe removal policy. Previously, only passengers with TSA pre-check status were allowed to bypass the shoe removal process. Now, all travelers, regardless of pre-check clearance, will enjoy the same convenience, eliminating the discomfort and hygiene concerns associated with walking barefoot or in socks through security lines. The original shoe rule was implemented after the infamous 2001 incident in which the shoe bomber Richard Reed attempted to smuggle explosive onto a plane in his footwear, prompting 2 decades of heightened footwear scrutiny. And this policy update marks a new era in TSU's commitment to smarter, more passenger-friendly security practices. While other safety protocols remain in place, travelers can expect a more seamless and hygienic experience as they make their way through airports. This seamless and hygienic experience as they make their way through the airports this summer and beyond. So, yeah, that's some good stuff right there. I like the fact that, we're back to using common sense. I get it. Somebody almost, blew up a plane via, their shoes. But, since then, like they said, technology has gotten better. And it's just, to be able to just walk through without taking on it, I think you're going to see the lines, moving a lot faster now. You don't have to, you can wear what you want to wear shoe wise now. You got to just, come to the airport in flip flops or, just shoes that may be a little comfortable, but if something was to happen, you're running around in flip flops or you're running around in shoes that, in any other situation, you'll just kind of be wearing around the house or, running to the store real quick or whatever the case may be. So I think this is a good thing for travelers. I think travelers should be happy about this because the one thing you hate is taking off them shoes, sometimes socks, just depending, and then having to put all that back on and then get to your gate. Now you can just be comfortable with what you have on. You can go through a security checkpoint and then get to your gate. So congratulations, TSA, for coming to the forefront with the make sense new change in their rules and regs. So congrats to TSA. All right. Let's keep it moving. We're going to probably get a couple in because, like I said, we're going to bring Mr. Rios up, Jimmy. We're going to bring Jimmy up here in a second. He should be chiming in about 10 minutes. So let's talk one more. Let's get into this guy. No, not that guy. This guy. North Carolina Governor Josh Stein has vetoed multiple bills led by Republicans that would have resulted in DEI bans in the state government and school systems. North Carolina Governor Josh Stein vetoed a bill in North Carolina and has firmly pushed back against efforts to restrict diversity, equity, and inclusion programs across the state. He rejected several Republican-led bills that would have banned DEI initiatives in government agencies and schools, describing them as an attempt to whitewash history. Stein stressed that North Carolina's strength lies in its diversity and that students should be encouraged to learn from a range of viewpoints instead of having free speech suppressed or history rewritten. The proposed legislation would have cut funding for DEI programs, prohibited state agencies from considering DEI in hiring, and limited what public schools and universities would teach about race and gender. Despite having enough support in Republican-controlled General Assembly to pass the bill initially, lawmakers now face Stein's vetoes as a significant roadblock. The governor argued that these measures are divisive and distract from the bigger issues that fair pay for teachers and law enforcement should be fair. The governor argued that these measures are divisive and state workers as well as improving public services. He criticized the bill as mean-spirited efforts to marginalize vulnerable groups and stir up culture wars. Although Republicans could still override his vetoes if they secure just one more Democratic vote for a supermajority, that outcome seems unlikely for now. So man, I don't even know who my boy Josh Stein is, but I'm kind of feeling what he's, putting out there. Josh, it just makes sense, man. I'm glad that somebody, like Josh, hold on, guys. Got it. Okay. Um, that's my landscaper again. Every week we hear, and the landscaper is outside, he's texting me. Anyway, so yeah, Josh. I mean, Josh Stein could be. I know he's a governor, but when you got a guy that's talking like this, who understand the ways of the world and understands that you're just better when you got everybody at the table, it just makes sense. Like he said, it's just it's argued that the measures are divisive and distracts from the bigger issues. You can't whitewash history, man. I mean, if you're so embarrassed about what happened, 400 years ago, to the point where it's still lingering, and you still got, a problem with, people of color actually having, the ability to be at the table, then that just says a lot about you. So anybody that's doing this right now, history will reflect. I just put it to you like that. History will reflect, and you will have some issues going forward, because we're not going to forget about it. People are not going to forget about, the stances that you took when it was easy for you to take them. Now, in this case, you got a guy like Josh Stein, where it's hard to take, the stance that he's taking right now, because so many people that's, on the conservative side is just trying to do away, with the fact that there's a such thing as diversity, and inclusion, and it's just it doesn't just make any kind of sense to me. Why wouldn't you want everybody to have diversity? Why wouldn't you want everybody to have equity? And why wouldn't you want it to be inclusive to everybody? So we'll keep our eye on Mr. Stein. Josh Stein is his name, the governor for North Carolina. At some point I was thinking about, where I want to retire at. And, South Carolina, North Carolina was definitely on the radar, more like the Charlotte, Raleigh area. And this does my heart good to see that, you still got some governors that's out there in these, I don't want to say this is a red or blue state. I think this might be a purple state. And just to see that it's some individuals that's not of color. And it ain't really about a color thing, because in this case, you got women, you got, it's a number of individuals that's in that DEI, somewhat circle, because we've been locked out for so long, and they finally had something that will allow us to all be able to be at the table. And now they want to take that away and just have it back to, it's just being of Caucasian descent, so to speak. So let's give hold on for 1 second, guys. Let's just give Mr. Stein a round of applause, because to me, that's just big news. So let's give him a round of applause. All right. So before we get into something else, we're going to get to we're going to get this interview out the way. This is about to be nice. I can't wait. Jimmy Rios. Jimmy's let me just kind of give you a brief little scenario on Jimmy. He's basically a financial strategist who help entrepreneurs climb out of the credit gutter and into the boardroom, from surviving the 2008 crash to building a multi-million dollar advisory firm. Jimmy Rios is here to break myths, drop strategy, and show you how to turn rejection into ROI. So as soon as he pops up, which it should be here within the next minute or so, we'll get all the way into it. All right. So give us 1 second. Let me bring Jimmy up. All right. He should be entering the session here any moment now. Then we'll get into it. I can't wait. This is going to be great stuff. Yes. So I hope everybody had a great 4th of July, like I was saying earlier. The summer is summering. It's been kind of hot. It was burning hot outside on Friday. It was moments I would have to go back to the car and just sit in the AC just to cool off, just to, go back out and enjoy myself. So, it was definitely a fun 4th of July, but it was definitely hot as well. So anyway, there's so much going on in the world, guys. I know y'all seen Diddy not guilty on RICO. Diddy was found not guilty on RICO and sex trafficking. He ended up being guilty on a couple other charges. Okay, so we got Jimmy here. We're going to bring Jimmy up, and then we're going to get into this, guys. This is going to be great. Let me bring Jimmy up to the stage. Make sure he's all squared away. There you go.
Hey, how you doing?
Hey, what's going on, my friend?
How are you?
I'm doing good, man. Glad that you could be here with us today. Time is the only thing we can't get back. And I know you're a busy man, so I don't want to, take up too much of your time. I got a list of great questions for you. Let me just kind of get it started by doing somewhat of a, introduction. I know I can't do you any justice, but so today, audience, we're joined by a financial strategist who's helped entrepreneur climb out of the credit gutter and into the boardroom, from surviving the 2008 crash to building a multi-million dollar advisory firm, folks. Jimmy Rios is here to break myths, drop strategy, and show you how to turn rejection into ROI. So this is my dear friend Jimmy Rios, CEO of Rios Business Advisors. How you doing, Jimmy?
Oh man, Dad, thank you so much. I'm doing well, man. I'm blessed. Can't complain. Just got back from a little trip to Mexico and got my little beach time, and I'm energized. I'm ready.
Okay, good. Because we're ready to hear all this great information you're going to give to the audience today. You do sound a little low on the volume. If you can just turn it up a little bit, that would be great, because I don't want these guys to miss not one word that's going to come out of your mouth here. So
All right. Let me know if that's a little better.
that's better. That's better.
Perfect.
There we go. Okay. So Jimmy, just kind of give us like a real quick origin story of,
Sure.
where you come from, how you got to where you are today. And
Yep.
then we'll just kind of piggyback off of that with a list
Yep.
of different questions that I think would be beneficial to the audience.
Thanks. I appreciate it. Yeah, I started my journey in credit back in 1997, and I was a student at ASU at Arizona State University, and I was actually studying to be a Spanish teacher, and I came into an opportunity to train to become a branch manager for a consumer finance division called Commercial Credit. Okay. And they were lending consumer loans and different types of loans tied to equity and different things like that. And I got in to really, just get through school. That was the idea. Right. But as I started working in those realms, I rapidly went into management, and I started taking a liking to it. At the time, we didn't have social media. Internet was still in its infancy. So a lot of my business came from the old school calling, just talking to people. And a lot of my clients were Latino based, Hispanic, Spanish speaking, right? And so they would get these checks in the mail that looked like checks, but they weren't, and they would bring them to the office, and they want to cash them, right? And that was the hook. And so we would take their application, we would do the analysis on the credit, we would start looking. So this was before like ChatGPT and all these AIs and everything does things beautifully, right?
Mhm.
We were doing it, and at the time we were even having to go like use personal property as collateral. We would
Right.
put it on a UCC1 and actually go collect on it if they didn't pay. It was crazy. This was like I'd say the pioneers of financing back in the day. What
Right.
it feels like now, it's like totally different. But
Right.
as I was working through those realms, I started seeing things that I didn't like, right? Things that I didn't have control over, how I wanted to help my people and getting to another level. And I started, that's where things started changing in my mind, right? I was a very young guy who didn't know much himself, but I did know that I needed to make a change for myself and for others. So it took a little while, but in 2001, I finally made a move. I went and I started a property management company that became Rios Financial Group.
Mm.
And ultimately, at the time, you didn't need to get a mortgage license,
Mhm.
So I started, working with people on helping them get into mortgages and then buying a house. And then but because of the way things were set up, especially with the Latino market, I had to do everything, right? They didn't have their taxes, then we had to do their taxes. If
Mhm.
they didn't have insurance, and come over
Mhm.
here, let's get you insurance. And so I became a one-stop shop in essence to everything. And I learned a lot
Right.
in different areas of business. So I started building like this ecosystem of financial services that it was born from the necessity of my clients. And so
Right.
for me to have a successful closing, I needed to get these things done. And if I didn't know how to do it, I would quarterback it with somebody that did, and I would
Mhm.
learn from them, and that's how it worked. And for a very long time, we started doing that, and then in 2008, right, the
Mhm.
world came crashing. Right,
Right.
everything that I knew inside of my world came tumbling. Now, at that time, I got very astute with business, and I started underwriting. I had my business that was producing on the retail end, but I
Mhm.
also started working for conglomerates like Citigroup, and doing wholesaling, and I
Mhm.
started doing correspondent lending, and I,
Mhm.
I just got really enthralled in that world of lending. and learned all the different pieces of how you could, make it happen, right? But imagine 2008 comes around and it just barrels you like a
Right.
steamroller, and now what do you do, right? So
Right.
I until I could get back to that level, I kept the business going, but I ended up going to sell cars, and
Mhm.
I worked for a dealership, and I did buy here, pay here, and I started seeing the effects of bad credit in the economy, and what these guys were having to get, cars at, and
Right.
I started writing my thesis, which was my book, decoding the mystery of business credit. Right,
Oh.
I started finding ways, working with attorneys that were friends of mine, that we could help individuals that bought these cars that were at 30%, 35% with biweekly payments, that were just getting, excuse my language, raped. And
Hmm.
I was looking for another alternative to help. So if I was able to help them with their credit, now we can go to the credit union, get them an approval, and now we can get them into a better loan. That was the
Hmm.
idea, right? It was finding different ways. But if I could do that, why couldn't I put them maybe into a better position with their livelihood, with their house, with their business, right? What
Hmm.
if we could get them business credit, and now we could put that under an asset, put it under a trust, and build on that so they can put their vehicles in their trust. Like I started thinking like a
Hmm.
madman does
Right.
in the lab, right?
Right.
And that was the catalyst that ended up becoming Next Level Credit, Rios Business Funding, Rios Business Advisors, right? It was like a trajectory, next level of
Right.
everything that we're doing,
Right.
but ultimately with the same goal, was to help people alleviate the burden of debt, put themselves in a better position. And then as time went on, I hooked up with my partner now, Brian Fontenot, and we developed a program called Eye Level to High Level. And this
Okay.
Eye Level to High Level program brought another layer of um, of financing that nobody had seen before, where we
Right.
can now take that debt, leverage the debt, and pay it off through investment profits, so that the business can get up there faster, pay off
Mhm.
the debt, and now you have lines of credit that you can use for your business. You have good credit on your personal side that's set up with a trust and everything, so you're better positioned. And now you have business credit that you can rely on to do the things you need to do.
Right. Man, you know what's so crazy, Jimmy, is that we almost got similar stories
Yeah.
because, yeah, because I was literally working as a branch manager at a bank around that 2004, 2005 time frame, leading up to 2008. And I'll never forget, I tell people this story all the time. I walked into my office. Well, I drove into the parking lot of my office, and I seen semi-trailer trucks lined up, and I'm just thinking somebody's moving into, one of the suites. Not in the last the last thing I could ever think is that these guys are in my office, right?
Right. Right.
So I get out my car, I go into the office, and it's full of people
Yeah.
removing file cabinets, removing computers. They
Like you
literally
see in the
came.
movies, like you see
Yeah,
in some of the movies that are going
yeah, it
back
was
to.
crazy. It was
It
crazy.
was surreal.
Yeah, and
Surreal.
so the VP of Flagstar Bank
Yeah.
came, pulled me to the side, and was like, "We need to talk." Pulled me into the office and was like, "This is your last day. We'll give you your comp plan. We'll make sure that you're just not going to walk away with zero, but there's no more job." I'm like, "Oh my God!" And from there, we had to kind of learn the industry all over again. It's almost
All
like we
over.
got an MBA in how to, do finance because,
Right.
for
The
the
rules
next,
changed. The rules changed 100%. It wasn't
yeah,
the way we were. We had accustomed ourselves for 10 years to run it in our own way. And let's be real. At the time, it was about production. It was about getting
right,
people into homes. I mean,
right,
yeah, we were inside of the problem, right? So you adapted to your surroundings. We had
Right.
no way to overcome that, because if this is the status quo and you need to hit a number and your month end, approve,
Right.
and it didn't matter, right? There was
Yeah.
no ethics, right?
Yeah.
It wasn't about ethics at that time. It was about how do you keep the ball moving? And when you think about it, when values of homes go up like that, when the structure's set up that way, where you're doing 120% loan to value loans,
It's
how
crazy.
on the hedge, right? That things were going to just keep going up.
Right.
Then eventually that was going to break. And
Yeah.
now in hindsight, and this is why we learn from the past,
Right.
because
It's
it
crazy.
made me it caused me to look at things in a different perspective,
Oh
to
yeah.
build the business that I have now, right?
Right.
To be able to mitigate risk and set up the parameters that we did with our hedge fund, with everything that we did, to be able
Right.
to come up with a creative solution that nobody had done. That
Right.
you have to go through the trenches. You have
Right.
to go through the negative side of that world to be able to say, well, if we did it this way
Right.
versus this way, now we can help more people. We're going to be so one of the things that people don't realize, the way we do business, we insure the capital that comes into the hedge. So you can still make money on the profits, but we have a percentage that's covered so we don't lose people's capital. That's
Right.
very important, right?
Right.
Because nobody wants to lose, right? Now, number one rule, Warren Buffett says, don't lose your money, right?
Don't lose it.
Rule number two, don't forget rule number one.
Right. It's true.
But
It-
it taught me a whole new lesson in life, and that's structure, right? You have to have contingency plans in place, so
right.
you avoid, I'm not saying avoid risk. I said mitigate your risk in the best way possible, so that
Right.
you can, as an investor, as a cash flow quadrant, a disciple, be able to take it to the next level and make your money work for you, but do it smart, right? Work with people that know more than you, and ultimately try to insulate yourself with as much as possible, so that if a pandemic hits, right? We all remember the pandemic. Here we were, 2008, going through the worst crisis, and then all of a sudden, 20 years later, or was that 10, 18, 10 years later, we're in a pandemic mode, right?
Right.
And people forget that it can happen quickly, right?
Yeah.
So now everybody's shifting gears, not knowing what to do. Hey, I'd already been through it. So by this point, the pandemic gave me more strength to
Absolutely.
really like do what I'm doing now. It
Yeah.
actually impulsed me to a way that I had never thought was possible. But it all through the grace of God, right? That we look through these things and say, man, I am so blessed to have gone through the dark to see the light, right?
Yeah.
Now, as an advisor, I'm empathetic to people's needs more because I've been there. There's almost no situation that I haven't been through, because when I went through that, I lost houses, cars. When I was building credit, I was building my own credit
Right.
first. Everything
Right.
I write about in my book is from personal notes and experience, or my wife or family or somebody that I worked with. So, like when you talk about getting help in something, you don't. If you need brain surgery, you don't go to a, I don't know, a pharmacist.
A
You're
foot
going to go
doctor.
to you're going to go to a brain surgeon, right?
Right.
So when people want money, you go to your bank. You think you go to your bank, you're going to get approved. We know that's a fallacy, because
Yeah.
unless everything gets met how the bank wants to see it, it's not going to happen, right? So
Absolutely.
they come to us to be able to piece that puzzle together. And a lot of times people don't like to hear what they already know, right?
Right.
When I tell people, well, look, you got to look in the mirror, and at this point, we're going to have to do some work. What do you
Right.
mean? I have a 750 credit score. I said, you have a 750 credit score, but look at this. And I start highlighting, because things come out at me, and I
Right.
start highlighting debt to limit ratios, and their profit margin is this, and they're negative here. And I said,
Right.
your credit score ain't got nothing to do with those
Right.
variables, but it's got
Right.
everything to do. The variables have everything to do in my decision to give you money, right?
Right.
So we
Right.
teach presentation and how to position. Just because an accountant did this doesn't mean we can't fix it, right?
Absolutely.
It's just that sometimes in accounting world, they're talking about take all your expenses and let's show as little or as a negative profit as possible. And now you just did two negative things to your business. You cut its profit margin, so you don't show any money, right? On the case that you're scared of paying taxes. But if we organize your business the way it should, now you have money showing. Now we're able to pay your taxes properly with the different tax minimization strategies that we teach, and the value of your business just went up by a factor of 3 to 5x. Nobody thinks like that. Exit strategies, right? How am I going to make money? Nothing like that. They just think they're fear-based, right?
Yeah, for sure.
But if you have God, you never have fear. You just got to get knowledge, and knowledge comes from others. So we have to work together.
Right. So, Jimmy, let me ask you this. You've been through financial storms most people don't survive, right? We just got through talking about that a little bit. What was the turning point for you, and how did failure shape your approach to credit and funding today?
That's a great question. I think failure was the catalyst and the motivator to keep me finding solutions, right? I didn't look at a problem as a problem at the moment. I knew it was bad. Trust me when I say I knew it was bad, because let me tell you, man, when you start using drugs or alcohol to supplement a feeling like I did, it quickly goes out of control, right? So in the downturn of everything happening, I battled an addiction that I had to overcome through the process of rebuilding, right? So you have two negative things happening in your life. All the while, you're trying to figure out this thing called life. And I had twin boys that were just born in 2008, and I already had a 2-year-old daughter. So my marriage was on the rocks. I was a new parent to twin boys and a daughter, and I lost everything, right? Like it was like, so when you get to the bottom of the barrel and you have nowhere to look but up, that's what I did. Was I said, okay, well, there's nowhere to go but up. I already lost everything. What are my choices? Well, I did have to be accountable to myself, and I had to change, right? By stopping the alcoholic syndrome, that part of it. It was a mental change. I had to change my friends. I had to change all these things, but I had to put some work. I had to get into some work. So I started looking at different ways to better my business, different ways to better myself, my credit, right? Everything that I teach now was on account, and it doesn't happen overnight. It took me a good 10 years in the rebuild mode and many more failures through that rebuild. But every single time that I failed, I went back to my basics. I went back to my what helped me get from here to here. Because sometimes you got to go down, right? And you'll take some steps back. And in business, that happened to me where I kept, sometimes I felt like I kept losing. Like I was like, and so when I'd have to go back to work in the corporate world, while I still stayed in the lab at night, in the evenings, on the weekends, trying to figure it out, right? I never gave up the idea that I wanted to be financially free, and now I had these kids that I had to look after and build a legacy, right? I consider myself a legacy maker because I feel that my job didn't just end when I failed. It only started the process of finding solutions to whatever that problem was. So if I could overcome addiction, if I could overcome the failure of a job because of whatever reason, sometimes there's external forces and internal forces. If I can battle those and overcome those, then nothing is in my way, right? I can do it all. And without letting ego get in the way, because ego was one of the biggest things that brought me down. Now I humbly started taking advice, humbly started looking at ways to better myself and listen, right, to advice, right? Whereas before, I would close people out, right? It was all me, right? I wouldn't listen, right? So now I do the opposite of everything that I was doing that was negative, right? And that's what's helped me get to this level, because and people think, well, you made it. No, I haven't. I'm constantly tweaking my system. I'm scaling. I have more souls that work for me now that I have to be responsible for. It's not just 3 kids, right?
Right.
Now I have another big group of people, and I feel just as responsible for them as I do for my kids. So
Right.
that's a legacy in and of itself. That's why I talk about exit planning and exit strategies and all the things that go with scaling and lifting yourself up, because
Right.
there's always going to be another problem around the way. It's just you don't know what that is. So you need to be insulated and prepared with contingencies, and have your coaches, your mentors, the lawyers, CPAs, bookkeepers, all these players on your team. Your team is not just you. It's composed of many people.
Right. Man, that's some good stuff, Jimmy. Let me ask you this. What's the number one lie entrepreneurs believe about business credit? What's the number one lie?
Well, I think that a lot of people get really stuck on the fact that they think that it's unattainable, right? Business credit, you have to have, a lot of money to be able to get business credit. And I have to have a business that shows a lot of profitability. And I just don't have that. I'm a startup. I can't get
Mhm.
business credit, right? I mean, I've threw a few of those out there, but ultimately it's that when I wrote the book, Decoding the Mystery of Business Credit, a lot of those myths were in there, because you don't have to have all those variables in place. That doesn't mean you won't get those variables in place. It's just that there has to be a process to get there. And
Mhm.
people that are maybe delivering food, right, or Uber driving, these are all entrepreneurs. They all can have their own business on paper, right? And we can make something out of that, right? But they don't know how to do it, so they don't do it, right?
Right.
Everybody that's out there hustling that is a non W-2, right? That is looking to build a business can do that and build business credit, right? What I advise is let's look at the mirror and let's take care of your house first. Let's
Mm-hmm.
build your foundation so that your house is built first with your credit, right? Your personal credit. That's not only going to give you bigger credit lines when you bridge over to business credit, but you always want to have good personal credit, right?
Right.
That's just number one rule is get your house in order, right? It, there's 5 C's of credit, right? One of those is character, right? And capacity, right? If you don't have character in everything that you do, right, it's going to flow and people are going to see that. So if you're trying to get a $500,000 loan for your business, even though your business is showing all this profitability, and then they go and look at your personal credit and it's in disarray, that says a lot about your character, because somewhere along the line you didn't take enough work to try to fix yourself, right? And people will look at that as a risk. Like, why am I going to give you 500,000 if you can't even take care of these little collections or late or whatever on your credit, right? So it's about also building good habits, because with business credit, it's not built the same as personal credit. You build business credit based on how fast you pay your credit. You can use 100% of your credit and not get penalized for it like you do with personal. But with business credit, you get more points the sooner you pay that net 30
Mm.
account, right? So if you paid
Okay.
it in 10 days or 15 days instead of 30 days when it's due, right? That puts your score at a higher level in business credit. You can also borrow 10 times more than you would with personal credit, right? So you'll get approved for 10 times more with business credit. And it's not difficult to do. It's just a series of steps to get it done. And so I tell people, look, learn about how to read a credit report of your own. If you don't even know your own numbers, what does that say, right? How are you going to take it to the next level if you can't even read your own, right? And it
Right.
sounds simplistic, but get a credit report from Experian, TransUnion, or Equifax and tell me what each line means, right? How do you know where the limits are? How do you know when
Right.
it reports? Did you know that if you pay your credit card bill on the reporting date versus the due date, you can increase your scores by 40, 50, 60 points just by tweaking it?
Wow.
People don't know that, right?
Yeah.
But we
Yeah.
do. We built our business around dissecting those myths and learning how to make credit, the algorithms that go behind score models, right? There's different
Right.
score models, right? And everybody is like thinks there's just one score. No, if I'm buying a car, it's going to score differently than if I'm buying a house, right? And the same for business. So we got to just start learning, especially, man, they got Google, they got YouTube. We didn't have any of that. I
No.
was old school, man. I had to go get some of these books. Oh, you can't see some of my books back here. I'd have to go there and start researching, going to
Right.
the library. Who goes to the
Right.
library? There
Right.
was,
Right. I
right?
used to
I
live
mean,
in the
these were just
library.
the things we had to do, right?
Right.
And so I teach my kids who are now 16 and 19, and their own. They're in their own world, right? They're starting to think, but they're catching on because they're watching my videos on YouTube, right? And they're starting to ask questions. I had them read Rich Dad Poor Dad, right? I had them understand what assets and liabilities are, right? How
Right.
to read a financial statement, how to read
Right.
their credit report, or they don't have their own credit report, but I'll have them look at mine and dissect it, right?
Right.
These little tools that nobody teaches in school, because that's the problem. Nobody teaches it, right?
Yeah.
And how are you as a parent going to teach your kids if you don't even know? It's
Right. That's so
the
true,
blind
man.
leading the blind. Yeah.
Right. Right. Well, let me ask you this. If someone's credit score is shot and they feel stuck, what's your first piece of advice they probably never heard?
That it's better. This goes against all types of conventional wisdom, right? But I'm telling you guys, I've been doing this for a while. My wife
Right.
runs our credit division. There's times where we come in like a bulldozer and tear down that house, right? Get
Mhm.
rid of all the negatives, all the ugly, and build on pretty, right? We take we color code things, right? Green is
Mhm.
good, red is bad, right?
Right.
Anything we see that's not green, we'll tear it down and we'll bring it back up, and it's
Right.
all green. Because if I structure my credit, and see, people don't realize that you can structure credit. Credit is built over time. Yes, the historical factor is. But what if I took all of this that I'm talking about and I started from zero? Now I'm at ground zero, right? So I start with a couple maybe secured trade lines and I use my own money to secure. So I'm now it's reporting as my own accounts. And then I go and I buy two authorized user accounts that are aged for 4, 5, 10 years, right? Doesn't
Mhm.
cost me a lot of money to show reported history on my credit. Now I
Mhm.
got two authorized user accounts, two personal trade lines, and then I go and I get maybe a consumer loan for $1,000 or $2,000, right? To just have as an installment loan. Now I got a mix of credit, right?
Mhm. Mhm.
Now I just in a matter of 30 days, I just got a 740 credit score, right?
Mhm.
And on paper, I got credit. I got
Mhm.
10 years of credit, right?
Right.
Took me 30 days, right?
Mhm.
I mean, I might have had to maybe it took me 30, 60 days to get all the negatives taken off. But while
Mhm.
I'm getting the negatives taken off, I can work on building, right? So you can always do both as a hybrid. And as you got your sweeper coming in, bulldozing, getting rid of the negatives, you got your construction company coming in, building, right? So within
Mhm.
30, 60, 90 days, all of a sudden your scores are where they need to be. Now let's talk about buying a house. Now let's
Right.
talk about all the different things. But all the while, they're getting educated from our side, right? Because we're talking about buying a house, we're seasoning. Where's your seasoning requirements? Let's
Mhm.
put some money in the bank and let's start making some seasoning requirements. If you're an investor, you need 10% or whatever you're trying to do. Let's start looking at that, right? Let's look at our eye level to high level program and incorporate the strategies we have there, right? To start building your coffers and start making money, right? So that you can start showing some profitability. A lot of different ways to make this work for you.
Right. Man, I can't wait to clip this up and get it out to the masses. Can you break down non-recourse funding in a way that everyone from a barber to a broker can understand?
That's a great question. First, because the reality is that when you start getting in the higher echelons of finance, people get lost, right? They don't want to hear it. It's boring, right? People want instant gratification. So when we talk about lending, they think of, so we go and buy a car, right? And let's say you don't pay your car. What happens? They take your car, right? That's called recourse. The recourse for the bank is to take that collateral, right? So that's where the word recourse originates from. The recourse is, what are my options as a lender, right? And if I have collateral on it, then that's my collateral. That's my recourse. Non-recourse, the opposite, right? Where now you're getting funding, but it's not going to be based on an asset or something that could be used as collateral to take away. And non-recourse funding can come in many different forms. Non-recourse funding can come in the forms of gifts, grants. It can come in the form of profits from our program generates profits, and it comes to you in the form of profits. Now, that doesn't mean you don't pay taxes on profits in a 1099 environment, but you don't have to pay the money back. So let's take a situation where you borrow money, right? Let's say you borrow through our recourse funding arena, right? And let's say you used your house and we used equity in your house to get some money. Now we got, let's say, 50,000 to play with. Now I use 25,000 of that. So that's recourse funding, right? I use 25,000 of that and I put 25 into this non-recourse funding tool, which is the iLevel High Level program. And that 25,000, let's just say over 6 months, generates profits of 10x. Now you're at $250,000 in profits. This money comes to you in the form of distributions. So if you take a distribution monthly, right, of 25,000 over 10 months, you just took out the distribution of your profits. That's not a loan. You use that money as profits, as non-recourse funding, and you paid off the 50,000 that you borrowed over here in recourse. Now you still have 200,000 available, right? And that's where it gets fun, because we just took somebody that traditionally speaking would have taken out a loan for 50,000 on a home equity loan and would have been stuck on a 20-year loan, right? Making payments, right? Thinking, I don't have that much cash flow because my monthly is $500, right? But instead, we put a fraction of that, we insured it and made that money start working for you. Now you got profits coming in, paying off the debt, right? Now we have money to pay off the taxes. Now you can think about buying your next property, right? Now you have the down payment. Now you got the money for your trucks or your trucking, whatever that is, right? But all the while, we build business credit. All the while, we're setting you up for success, right? And people, we built a blueprint for success that traditionally people don't think like that. They go into business and bootstrap, and they're very good barbers or truck drivers or whatever, but they don't think about the planification status of their business, the blueprints, all those tools that I'm talking about, because nobody has shown them. They go to a bank and get denied. Now you got 30 inquiries on your, who's going to lend you money if you have 35 inquiries on your credit on each trade line, on each bureau?
Nobody.
So I break it down very simple. So everybody, that's why we call it the eye level. Because if I talk to you in the terms and jargon of an underwriter, and we start throwing acronyms left and right, and nobody's going to understand what we're talking about. They're not going to believe you, and they're just gonna be like, sorry, bye. And this is why we start seeing people get into ugly loans too, right? We work in the arena with every loan that's possible. Now, if I can take an ugly loan, when I say ugly, I talk about anything that's hard money, merchant cash. Now, just because they're ugly doesn't mean that they can't be useful, right? We take these vehicles of finance and we turn them into pretty loans, right? It's good debt versus bad debt, right? And so we can take an ugly, because your situation might only give you an ugly loan, right? But what if in 60 days I fix your credit, right?
Right.
Now we can take and refinance that. And because of the way we've handled our institutions, they will lend us money because we pay them back through our hedge so easily, right? 3, 6, 10 months,
Right.
that loan is paid off, not 3 years, not 7 years. You don't have to go SBA if you don't have all the tools. And we do all those. We do SBA. We do, from soup to nuts. We do,
Right.
right? There's nothing we can't do. It's just, is this the best situation for you? And how are we going to go about paying the debt? Another thing we do is we set up debt service coverage reserves. So this way, you're not having to dig into your own pockets to pay that debt. We pay it through the reserves that we set up. So every month, it's coming out of this little diagram that we set up for you, so that you know for a fact that debt's going to get paid off. Otherwise, left to your own accord, we're emotionally unstable individuals. And if, Joe, our buddy, calls us that there's a game in Vegas that we're going to go together as a team and go watch, we're going to go there and put it all on black, and we're going to come back and we just spend all our money, right? So we need to be very focused on what the outcome and the goals are.
Right. Well, speaking of debt, is there ever a right time to take on debt, or is that the wrong question entirely?
No, I think it's a great question. I think a lot of people, because of fear of debt and knowing that they have another line item that they're going to have to attune to, that they're not going to get into another piece of debt. But let me put it this other way. If I have an opportunity to take a debt instrument, right? Let's say $20,000. $20,000, even in hard money, even if they gave me the worst loan, and I can work with the arbitrage, meaning the difference between what I borrowed to what I can get on it. Let's say I borrowed at 15%, right? That's 15%. Let's do 12% for the sake of numbers. At 12%, my borrow rate is at 1% per month, right? That's 12 divided by 12, right? That's hard money, 12%. But if it's only costing me 1% per month to borrow, and I can make 5%, 10% per month on money that's coming in, I just made anywhere from 4 to 10% on my money, borrowed money, right? So why wouldn't you borrow if you're making 4 to 10% on your money, right?
Absolutely. Right.
It's not your money, but you're paying it back, right, with the profit. And even if you have to pay 30% in taxes, you're still at a 60% gain. So why wouldn't you use other people's money if it's making you money? It's opportunity cost. That's how you think.
Right.
Why do you think flippers in real estate, they think about that, right? It's going to cost me X amount to get this property. But if I can turn around and sell it in the next 90 days at this margin, I just made X amount after paying off the hard money.
Right.
You start talking about fix and flippers, do you really think they look at interest rates? They do to a point. Now, if they have 3 hard money lenders, they're going to go with the one that gives them the lower interest rate, but also the terms. What if I have somebody that gives me the rate at 15%, but there's no prepayment penalty, right? I'm going to take the one with 15% that doesn't have any contingencies or any strings attached, and I'm going to use their money as long as I want because I can, right? So, and how fast can I get the money? If it's going to take you 60 or 90 days to give me money because I have to jump through a bunch of hoops, I'm probably not going to take that 9% loan. I'm probably going to go with this one at 15% because I can get it. I can get it and make money, start working for me, right? That's where we think different, right? That's where we change the paradigm shift because traditionalists, right, are going to say, no, don't get in, the Ramseys of the world are going to tell you don't get into debt. I'm going to tell you get into debt and then let's pay it off, right? Let's let our money work for us, right? And then let the money pay off the debt. The steps 3 and 4 of the cash flow quadrant in Kiyosaki's book talks about building a business and then making money, building a business with a system and then making money work for you as an investor, right? So if I'm able to provide B and I, right, those 2 quadrants, the B and the I quadrant for you, right? Why wouldn't you do it, right? Now it's I can sell that. I can sell your houses, but I can't do the work for you. In other words, there's going to be a role that you play in everything that we do, right? You're the captain of the ship. I'm just going to give you the directions, to get you there a lot quicker than left to your own devices.
Okay. Let's talk real world strategy. What does someone do today if they want to restructure business debt or access capital and have less than perfect credit?
So let's go backwards. If they have less than perfect credit, right?
Mhm.
We still want to see how we could restructure the debt, right? Because if there's a way that I can free up some of that debt and being able to get money working for you, even if it's a small amount, 10, 15, 20,000, that is going to produce for me, that is eventually going to help me pay off the chunk of the bulk of that debt. Even if it only took 6 to 9 months to do it, then it's there, because you don't know how we can go about getting that extra money even with that credit, right? You might have very good receivables that we can tap into. It has nothing to do with tapping into the credit that you have, right?
Mhm.
So there's other things like solar contracts. We can tap into a solar contract and get cash from that. Life insurance policies, right? We can go into there. Crypto. There's a lot of different ways to skin the cat. So just because you've been turned down by other companies doesn't mean that when you come to Rios that we're not going to dissect this thing and try to find. We're in the business of manufacturing, yes, not in the business of manufacturing no's. So if we can find a way, we're going to put it to work. That's on the credit spectrum. But on the other side, right? You come in. Let's say you do have good credit. Let's say your numbers are good, but you got overextended. So nobody's lending you money because you're overextended. Here again, we're going to look at, well, let's look at your situation. What do you got going for you that's going to give you some leverage, right?
Right.
Because not everything is in the way that we think it. We have to break the box down. There's no box in what we do. When we break the box down, now we're looking at a whole different set of plans. And again, we might have to go backwards to go forward. We might have to do some things that you don't want to do or don't want to hear about. But if you look at the end and the pot of the rainbow's at the end, and you got to do some steps to get to the pot of the rainbow, then let's do those steps.
Man, you are giving some gems today, man. Can you walk us through the biggest mistake you see business owners make when applying for funding?
Yes.
Okay.
I think the biggest mistake is not being prepared presentation-wise for what's going to come at them. In other words, it's very simple, right? You go to apply for credit. They almost 99% of the time give you an application and a set of parameters of things they're going to need. How come, and I'll ask this just like regular, how come we go through that application like we're filling out an application like for a job, right? Like how come we're not going in and really taking the time to look at all the numbers and really take time to do the presentation properly so that we can tell our story for our business, right? Or for whatever we're trying to do. How come we rush through things in a way where we don't even put the whole package together? And I'll tell you, man, this is the biggest pet peeve of underwriters. If you start submitting a file and it's choppy, meaning you don't even have your EIN number in there, you don't have any of your sales, year to date, bank statements. I mean, these are very basic components of a presentation. The uglier the presentation is, the more choppy it is, the faster you're going to get denied. Because underwriters are human too. And if they have to go through 10 files, they're gonna cherry pick the ones that are presented properly and good and easy. Because if I can go through this one and it only took me, these guys are getting paid good money, but they're getting paid hourly. They're not, self-employed. So they'll go through the ones that gets them through quicker. And if they got to put this thing together and call you 5 times to get 2 or 3 items, it's a pain. And it's going to delay the process. You're going to get easier to deny than have to piece it together, right? So think about that, right? Think about if you don't know how to do it because you don't have all the things, you need an advisor. You need a mentor. You need somebody that could put another set of eyes to it and say, look, it behooves you to go talk to this person to get this done. Well, I don't have that. Well, that's what I'm saying. Pay the money, get this done. You're investing in your approval. How much money can you get if you do it right versus zero, right? Which it takes you a little bit longer, but you have the potential to get this versus this. And also, not every bank is going to approve, even if you have an 800 credit score. I had a guy with a 750 credit score trying to get a $70,000 loan for a carpet cleaning, and they got denied by 3 banks, right? Because that business or whatever wasn't fitting the mold of what the bank requirements were, right? And they just wouldn't do a personal loan. They wouldn't do this. So you need sometimes to talk to a business broker or a business funder who's been doing this for a while and can put it in the right bucket, right? Make it fundable. Otherwise, you're just going to get an inquiry on your credit. It's going to knock your credit score down, and every point counts in credit, right? So don't put yourself at a disservice because you just didn't know. Ignorance doesn't count, unfortunately, and they just don't give you credit for being ignorant. It doesn't count. So you need to start educating yourselves. You got to start listening to my videos and everything that I talk about. I'm not trying to sell anything. I'm just trying to teach like how to live life a little better so that you don't make the stupid mistakes I made for 20 years in business. Right? Everything I'm talking about is because I've done it already, right? As a mistake. So I made those mistakes already. And I just feel that if you can be more efficient and better in your choices, you're going to have a greater chance of success.
Yeah. All right. Once again, good stuff, man. Culture, legacy, and ownership. Let's talk about that. In a world of social media, flexing, and misinformation, how do you help people build real wealth, not just look like they have wealth? How do you help them build real wealth and not perpetrating wealth?
That's such a great question. I think it's easy with social media to paint a picture of grandeur and success, right? Everything that glitters is not always gold, right? And I always talk about due diligence, right? You got to put these people to the test, right? Because everybody that's out there talking a good game, right? Sometimes it's just spitting from somebody else and just making it their own. They haven't really gone through the trenches to find out what it is, you know? So being able to build on testimonials, right, from others that have worked with you is a very important aspect, right? I mean, they have an old saying, you got to trust and verify. You got to trust but verify, right? When you're going to work with anyone, right, who's supposedly reputable or has done it, this and that, get your facts. Don't just Google and look at a video that, you know, I could pay somebody a lot of money and make them look great, right? I mean, let's get down into the trenches and let's start looking at the acumen of that person. Let's look at, you know, how they're doing, you know, through testimonials and other people that have worked with that individual or institution. And then you start really seeing, you know, forthright. If there's something negative that came up, there better be some type of rebuttal or something from, there's always two sides to a story. If that person doesn't want, if that owner or that individual doesn't account for it in some way, then how are they going to account to you if something happens, right? You need to be able to get accountability in everything that you do, right? So, I mean, when you're working with people, and this goes for contractors, any business model, right? How do you discern who to work with, right? I made a lot of mistakes because I didn't follow my own advice, right? Maybe I got led by, you know, emotion, and, you know, this person felt right, you know, but I didn't do my due diligence, you know, and it bit me in the butt because I got led by emotion, right? You got to think like, you know, like, for example, AI doesn't have emotion, right? Like, robots don't have emotion. They're very due diligent in finding the stuff, right? I tell that machine, hey, find me all the dirt on this, and that. You know, it's gonna search and open things up and look for things, and that's what I want. You know, not because I want to be negative. I just want to feel that if I have 2 or 3 options, I'm gonna go with the one that gives me the better feeling of security, right? That I feel that is gonna be a better investment for my time, my energies, and my money, right? If those companies or persons or individuals, if those can answer those three things, then I think I'm going to be in a better position and my chances of success. And I know there's other variables that are unaccounted for, but my chances are a lot better when I start discerning through those things myself.
Right.
Yeah.
Good stuff, man. Let me ask you this. You've helped hundreds of entrepreneurs, right? What do the successful ones do differently than the average person that don't? What do they do different?
Let me tell you, there hasn't been one successful person that I have talked to that hasn't gone through the negatives of life and been able to work harder at trying to better themselves.
Right.
Because the ones that are constantly improving are the ones that struggled in a lot of facets and phases of their business and their personal life. So they had to go get up earlier, right? To be able to go to the gym, to be able to start eating better, to start reading more, to start educating themselves, to start networking and getting around other people. If you are only closed in, you're closed in your mind, you're closed in everything that you do, you're only going to see through one set of lenses. You're not going to open it up to the opportunities and the ability to see other things, because a lot of the information I get is from other people, right? So you need to be able to open yourself up. But the experiences I get from discipline, from working, from really putting in the effort, right? Like, you don't sit on your laurels. And don't get me wrong, that doesn't mean you can't enjoy a trip. I just came back from Mexico, and let me tell you, I got work done. I went and I had a presentation done on a big development, and in that presentation, they opened it up to questions, and nobody was asking questions. So I was like, asking questions because, one, because I wanted to know more about this development, but two, if I'm interested in representing others in wanting to purchase development in Mexico, why wouldn't I want to know all the bells and whistles and ins and outs of that development? So what happened after the meeting was over? People were coming to me, asking me if I'm in financing, how I could help them, right? Like, that was in an hour presentation and an hour of open buffet and drinks, right? In 2 hours of work, I talked to the owners of the development. I talked to two other developers that are looking to bring financing that didn't have that, right? So in a span of a little bit of time, they all wanted to know what's this thing called eye level to high level, and how could I use it inside of my development?
Wow.
I mean, it didn't take much, but just opening up your mouth, right? But we have to be like that. How many times have we gone out ourselves, out to dinner, and we never, like, we don't talk to anybody, right? I'm always handing out my card. Hey, what do you do? What, how's life? And it's not always because I'm recruiting. It's just, you never know when you can help somebody, right? You never know when you can be of service to somebody else, right? Maybe somebody's going through a bad time in their life, and you can be the pillar of that hope, right? That beacon of hope, right? I haven't even talked about money to them. I'm just talking about being a good person and helping them out, because maybe, I saw a 16-year-old girl outside of a Circle K last week. It was 113 degrees around 3 in the afternoon, and she was selling these like bracelets that she made, and I was like so intrigued. I came up to her. I had my Rios Business Advisor shirt, and I said, "What are you doing?" And she goes, "I'm selling these bracelets I make for $3, $5, and $10." I said, "Man, how old are you?" She's like, 16. I said, "You're 16. You're in the middle of the summer. You could be out playing games with your friends at the mall, and you're out here hustling." I go, "What's motivating you to do that?" She goes, "Because I want to live a better life." And I was just blown. So I got her on Facebook, right? I got so moved by, I mean, obviously I bought some bracelets myself. I like wearing these things, and I bought some to support her business, but I also got her on there to talk about her business. And I gave her my book. I gave her Decoding the Mystery of Business Credit, and I personalized it. And I told her, you have a future if you keep that mindset and that grit and that determination. Those three things I told her. If you start working with these tools already that you are mentally prepared to do because you're doing it, whereas right now that many of us older people wouldn't come out and do that, right?
Mm-mm.
Because of shame, because of all these other variables. But if you got to hustle, you're going to find a way to do it, right? We got to take that same mentality in everything we do in life, not just a 16-year-old who wanted to probably just make some spending money, but she was doing it through the elements, right? Through shame or not, right? She had an agenda and she was going to go out there and get it. And I guarantee you she made it happen that day.
Yeah.
You know?
Yeah, she got you.
Yeah, definitely. She got me. And let me tell you, that post got some people viewing, and maybe it changed somebody's life. Maybe it got them thinking differently. Like, wait a minute, I'm complaining about job seeking and I can't get a job. Maybe I got to go out there and sell something, right? Tell me how many people we see on the side of the road that are homeless.
Yeah.
I gave somebody one time I gave them a 24 pack of water, right? Some ice and a cooler, right? I think I spent like $20. It wasn't even $20. Less than $20 I spent. And I gave him that and I said, go out there and sell these for $1 a piece, right? Make yourself some money. And he was like, let's go. Because now he's there. I told him, after you get those $24, go buy yourself another 24 pack and double that. Compound it, right?
Yeah.
Everything I talk about is compounding. Compound your money, compound your love life, compound your life, compound your health, right? Through series of actions that we do daily, we start compounding. So if it can be done with zero, right? In the fact that they had somebody reach out and give them, it took somebody to help them look at things differently. Versus that guy over there that's not doing nothing, hoping that somebody's going to give him a handout and put him to work. And that was changing people's lives, you know?
Yeah. Hey, man, we got one more round of questions. We call it our lightning round, and I'm going to let you get out of here, Jimmy, because I know you're busy. It's just real quick. You just give me some kind of quick answers. You've probably seen these on other segments. Our first one is, what's worse, bad credit or no credit?
Bad credit.
One book that changed your approach to money.
Think and Grow Rich.
Think and Grow Rich. Okay. What's one thing banks don't want borrowers to know?
Banks don't want you to know how they get their money and what they do with your money.
Right. Right. Okay. Business loans, approval in 24 hours or your 6-month coaching program?
I would lead to 6-month coaching program because I'm going to get you way more money.
Okay. That's sweet.
Yeah, I can get you an approval in 24 hours, but think about this. You're only going to get it a little bit, right? What if we structure you better over the next 3 to 6 months, and now we go for the jugular, you know?
Right.
It happens.
Okay. Yeah,
I mean, business dictates needs. So, I mean, if they need it, we're going to get it. But if I had those two choices, definitely.
6 months. Okay. Well, Jimmy, man, that is going to wrap it up, man. What I'm going to do is I'm going to clip this up. I'm going to send you the actual video, and you can maybe do the same, get it out to your network of people, because I think this was a great interview. We talked about a lot of good stuff here, man. But in the meantime, between time, where can people find you at? Kind of give us your socials and things of that nature, and then I'm going to let you get out of here.
No, definitely. I think everybody relies on social media, right? And looking at things. So on a YouTube channel, if you go to @Rios Business Funding, you're going to see my videos. You're going to see a lot of things that I put on there, and you're going to want to subscribe. But you're also going to want to just text on there, right? Put on there, I want more information. I'm constantly on there. My team's always sending me information. We'll get you on a one-on-one, right? So we can start talking about your situation. RiosBusinessFunding.com is our website. You can do the same there. In fact, on the website, if you scroll down on the first page, towards the bottom is my book, Decoding the Mystery of Business Credit. And you can get it for free as a flip book. So you can start getting even more knowledge, I also have it on Amazon. And then you can always call me. I'll put my information at the end, and you can always call me, and we can schedule a meeting there as well.
All right, man. Well, look, man, I appreciate your time, Jimmy. I know it kind of took us a little bit to get on the same page here, but I'm so glad we stuck with it, man, because
That was
today,
great, man. I appreciate your time. It was awesome.
same here. Same here, man. A plethora of information for the audience. I'm going to chop it up. It's so much to chop up. I'm going to send out massive, emails, or not emails, but over to the YouTube channel,
Yes.
so we can kind of get some people locked in and get them to get a better understanding of credit, loans and things of that nature. Because you've given a plethora of information today that could help a lot of people. So I really, really appreciate it, man. And hopefully maybe
and putting this out there, I think it'll help a lot of people. You're followed by a lot of people. I think you're doing a beautiful thing, man. I really appreciate it.
Yeah, I appreciate it too, man. So hey, have a good day, man, and we'll talk soon. I'll be sending you clients, because we get a lot of clients who need help with credit, business folks who need, business credit. So this is not going to be the last time we speak. So you don't have to worry about that. As we're talking, I got 3 or 4 clients I'm getting ready to send your way.
Let's go. It'll work.
I got you.
Let's do it. I'm an open door, man. Let's go.
Okay, bro. I appreciate you, man. Have a good day, Jimmy. Okay,
right, man. We'll talk soon. All right.
Okay. Thanks, man.
Take
care. Yep. All right, guys. That was my guy, Jimmy Rios, man. That was a lot of good information. Like I was telling him, I cannot wait to chop this up and get it out to the masses. It's hard to get, individual like Jimmy, to come to like platforms like this because they're so busy. They got so much going on. So, to get him to take some time out and come speak to you guys and give you all kinds of jewels is always greatly appreciated. And I only do it for you guys, right? When I get emails saying, of course I vet the individuals out, see what they got to bring to the table. And when Jimmy emailed me and I, kind of read his bio and kind of, did my due diligence on him, I was like, it's a must have because not a lot of people know about the things that he brought forth today. Credit. I mean, he just broke credit down in so many different ways, guys. Like I even learned, I've been doing this. I've worked for banks. I've been doing this stuff for a long time. And today he educated me on some things, right? And if at any point you guys want to reach out to him and, for whatever reason, you didn't get his information on his background, his socials, his website, just DM me and I'll get you directly connected to him because I'm pretty sure it's a lot of you guys out there, that for whatever reason could use his services. And like he said, he has a 6-month coaching program that I think would be beneficial to individuals who are looking to kind of take their business to the next level. That's what he does. And trust you me, he knows what he's talking about because he was there. He's seen it all. He's been through it all. Like he said, he went to the bottom and got himself back up to the top. Same thing with us. We did the same. His story is almost similar to my story in a lot of different cases. I mean, because we started our business right after that 2008 crash, and we had to just learn so much about the business and, how to go about, once it comes back, what are we going to do? What's going to be our niche? And we got into the commercial side of things and learned the commercial business, through and through. And then all of a sudden, the fix and flip business dropped into our laps. And we was able to be there to take advantage of it because we were prepared, because we had learned so much during that downturn where, we were struggling. Like he said, we had to go get regular jobs. And then after work, we had to be in the lab, just feeling the business, tasting it every day, going through different deals, not getting funded because everything was, pretty much, dried up at the moment. But we took the concept of working retail as far as making sure we do business the right way. And then once the business model opened back up, we was right there to take advantage of it. And we've been going strong ever since. So I know exactly what he was talking about when he was kind of breaking his story down, and all the things that he went through to get to where he's at right now. So, I can appreciate where he comes from. I can appreciate his candor, his transparency about everything. A lot of people don't do that. A lot of people kind of try to stay behind smoking glasses and, and not be real with you. And that's not the type of people we like to bring forward. We like to bring real, genuine people on the platform who can give you information that can make you better in life. Not just in life, but life and business life, right? Because that's what this is about. Just trying to help people get to the next level, build generational wealth. And I think what he brought to us today, I've had a couple people up here so far, crypto lending, just regular hard money, private money lenders. And then we brought Jimmy up today to just kind of give you like the nuts and bolts of what you need in order to be able to do any of those businesses. You got to have your credit straight. You got to have a plan and each time you go into these transactions. You can't just, go into it hoping that somebody is going to give you what you think you deserve. You got to prepare yourself before you get into any kind of business situation. I think he kind of broke that down in a way that was definitely digestible today. So once again, we just give a big shout out to Jimmy. I'm going to give you guys these 4 more mortgage and real estate hacks, and then we're going to go ahead and get out of here. Our first mortgage and real estate hack, guys, is our DSCR loophole for first-time investors. Did you know you could qualify for a debt service cover ratio loan without showing traditional income if the property's cash flow meets lenders' benchmarks? Translation, the property qualifies for the loan, not your job history, right? Hold on for 1 second. Let me see something. Okay. So that's hack number 1. I do these all day. I probably got 4 or 5 in our pipeline right now. Investors who have investment properties. They're looking to pull cash out because they want to buy additional properties. A long time ago, this was kind of like the void in the market. There, you had investors who owned a lot of real estate, but they didn't really have a lot of, ways to extract the equity from that real estate. And then the fix and flip era came into effect, and it allowed this product to actually be presented. The DSCR product is a great product, low interest rate, amortized out. It's really a bank loan for investors. Great product. Investors love it. Like I said, I'm doing about 5 or 6 of them right now as we speak, pulling cash out. Guys get to go buy more properties and, just kind of keep that going. So if you're an investor and you don't know about that program, please feel free to, give me a quick email or DM, and we can talk further. Right? Okay. The next hack is the 3-2-1 buy down strategy for flippers. Use a 3-2-1 buy down to drop your rate the first 3 years. Great for flippers who plan to sell or refinance before year 4. Lenders like Lima One, like ourselves, are now offering it with no prepayment penalty. Great product, 3-2-1 buy down. You see it a lot, because a lot of times you got this 5-4-3-2-1 buy down, and not most, but some investors they don't want to be in that long of a a buy down rate. They really just kind of, if you could get them 3-2-1, and yeah, now we have 0 times once you get into a loan, you don't have to wait, or you won't be penalized if you want to refinance in the first year, second year, third year. And with the 3-2-1 buy down, first year, you pay 3%, second year, 2%, third year, 1%. And then after that, you don't have that prepayment penalty there anymore. So that's a great one as well. If you can, if you do a DSCR loan, just depending on, how long you want to be in that loan, you definitely want to speak to whoever you're speaking to about a 3-2-1 buy down. All right. Pull equity from your LLC without using personal credit is your business. If your business owns real estate, you may be able to pull out capital via a business purpose, cash out refinance without touching your personal credit profile. Major gem for scaling. We probably should have spoke to Jimmy about that a little bit, but I know, most of the loans that we do, they have to be in your LLC. We don't even do loans in your personal, personal name anymore. You will be the personal guarantor, but the actual loan itself will be in the LLC, so it doesn't go directly on your credit unless you do some things you're not supposed to do, like foreclosure. Then it could potentially go on your credit at that point. But this is a good one. You kind of protect your personal, and you're able to, start an LLC and then put properties up under that LLC. So that's an actual great hack as well. The co-investment down payment method is the last one. Lenders are now allowing down payments to come from joint venture partners if you're bringing the deal in the sweat equity. Find money, bring value, close faster, right? So this is definitely another good hack that you would, probably want to take a look at. If you're in that space, you got partners who, don't necessarily want to be intimately involved, but they're willing to help out via down payments, and things of that nature. This is definitely, I haven't seen it yet in my space, but it sounds like I'm hearing chatter about it. So it sounds like it's going to be one of those things that's, coming down the pipe, right? So that is going to be it for us today, with some things that we wasn't able to get to. We'll jump back into those things next week. But I'm glad that, because of the reason we didn't get into those things was because Jimmy came on and gave us, a plethora of information. So we'll take a look at some of those hot topics the next time we come here next Tuesday, same time frame, and then we'll have something special for you then as well. So whether you're dodging interest rate hikes, building your first flip, or trying to figure out how the heck to get a piece of the Atlanta's $3 billion, piece that they're offering, one thing's clear: ownership is the new protest. Make sure, guys, you subscribe, share this episode with someone who's still wearing shoes at TSA, and don't forget, wealth favors the well-informed. I'm your humble host, G Money. This is the Mortgage Mayhem Podcast, and we'll see you next time for more money, mayhem, and moves that matter. And I'm out, guys.
Welcome to the Mortgage Mayhem